$700 billion. That's how much global market value was erased in just a few days. Not by war, not by a pandemic, but by tariffs. The United States has unleashed a new wave of trade restrictions that have shaken the world economy to its core. What began as a series of economic measures to protect national interests has now triggered a global chain reaction, an economic war that's rewriting the rules of finance, trade, and power. Stock markets are tumbling, currencies are volatile, and investors are searching for safe ground in a world that suddenly feels unstable again. Let's break down what happened, how $700 billion vanished almost overnight, and what this means for the future, from gold to crypto, from Wall Street to Shanghai. The first blow came when Washington announced sweeping tariffs on imported steel, semiconductors, and key electronic components. Within hours, China, the European Union, and other major economies retaliated with their own trade measures. The ripple effect was immediate. The Dow Jones fell by more than 2.8%, wiping out over $400 billion in U.S. market capitalization in a single trading session. The Shanghai Composite Index plunged by nearly 3.5%, while European markets saw collective losses exceeding $250 billion. Add up the global figures, and over $700 billion in market value evaporated in less than 72 hours. But these numbers tell only part of the story. Behind the scenes, multinational corporations began bracing for impact. The cost of imported components surged. Tech giants faced production slowdowns. Automobile manufacturers announced plans to cut shifts and reduce exports. And ordinary consumers? We're already paying more as the cost of everything, from phones to food, starts creeping upward. But this economic war isn't just about trade. It's a struggle for control, over currencies, resources, and global financial influence. For decades, the U.S. dollar has ruled as the world's reserve currency. Nearly 60% of global reserves are still held in dollars, but that dominance is being challenged. China and Russia have been pushing for trade in their local currencies, reducing reliance on the dollar. At the same time, the BRICS nations are accelerating discussions around a new global currency system, one potentially backed by gold or commodities. That brings us to the next question. How is all this chaos affecting gold and crypto markets, the two key havens when global trust collapses? Let's start with gold. Whenever there's uncertainty, gold shines brightest. In just 1 week following the tariff announcement, global gold prices jumped from $22.70 to $23.85 per ounce. That's an increase of over 5%, one of the sharpest short-term spikes in recent years. Analysts predict that if these economic tensions continue, gold could test new highs near $2,500 to $2,600 per ounce. Central banks, especially in emerging markets, have already begun increasing their gold reserves, with countries like China and Turkey leading the trend. Why? Because gold remains the oldest and most trusted hedge against inflation, currency wars, and financial uncertainty. When markets fall, investors run to gold, and in this new economic battlefield, that pattern is repeating stronger than ever. Now, what about cryptocurrency? The crypto world thrives on volatility, and the current economic chaos has created the perfect storm. Bitcoin initially dropped with traditional markets, falling from $64,000 to $59,000 within 48 hours as investors sought liquidity. But shortly after, it bounced back sharply, crossing $66,000, as traders viewed it as digital gold in a time of global tension. Ethereum followed the same pattern, dipping to $2,400 before rebounding past $2,700. So why this rebound? Because many see crypto as a hedge against the traditional financial system, one not controlled by governments or central banks. As trade wars and sanctions grow, people are looking for assets that can move across borders without political restrictions. However, not all cryptocurrencies are benefiting. Stablecoins pegged to the dollar like USDT and USDC are facing increased regulatory scrutiny as countries question U.S. financial dominance. Meanwhile, decentralized tokens and privacy-focused assets like Monero are gaining traction among investors seeking independence from government control. If this economic standoff continues, experts project Bitcoin could surge toward $75,000 to $80,000, while gold could remain above $2,400. Both assets could become the twin pillars of wealth preservation in this era of uncertainty. But beyond the markets, something deeper is happening, a restructuring of global trade itself. Factories are moving closer to home markets, supply chains are being reconfigured, and nations are racing to secure energy, technology, and critical minerals. The International Monetary Fund has already warned that continued economic fragmentation could shrink global GDP by up to 7%. That is equivalent to erasing the entire economy of France or Japan. At the same time, inflation is creeping higher. Oil prices have surged past $95 a barrel, and energy-dependent nations are feeling the squeeze. Food costs are rising too, as tariffs and logistical disruptions hit agricultural exports. This isn't just an economic dispute anymore. It's a full-scale reordering of the global economy. For the United States, the tariffs are meant to reassert dominance, to bring back manufacturing jobs and protect domestic industries. For China, it's about building resilience, developing new trade routes, new partners, and a financial system less tied to Western control. Europe, caught in the middle, is struggling to balance alliances with both powers while keeping its own industries alive. The result is a world breaking into economic blocs, each building its own systems, currencies, and technologies. We're seeing the birth of a multipolar economy, one where no single nation can dictate all the rules. And in this fractured world, assets like gold and crypto become more than just investments. They become tools for survival. But, as with every revolution, there are winners and losers. If gold crosses $2,600 and Bitcoin reaches $80,000, traditional bonds and equities could face years of stagnation. Emerging markets may struggle with capital flight, and ordinary citizens could see their savings eroded by inflation if currencies continue to weaken. Central banks might respond with digital currencies of their own, CBDCs, to regain control over money flow. That could mark the beginning of a cashless economy, where governments can directly influence spending, lending, and taxation through programmable money. Crypto supporters see this as both a challenge and an opportunity, the beginning of a digital tug-of-war between centralized and decentralized systems. So, what happens next? If this economic war intensifies, we may see three major trends shaping the next decade. First, a return to gold-backed finance. More countries may use gold or other commodities to settle international trade, reducing their dependency on the dollar. Second, digital currencies will dominate. Governments will accelerate their own digital coin systems, while decentralized crypto continues to grow in the private sector. And third, fragmented globalization. The world economy will shift from one unified system to multiple regional trade zones, US-led, China-led, and neutral alliances like ASEAN or BRICS+. The age of open global trade may be ending. In its place, a new world is emerging, one built on competition, technology, and resource control. The $700 billion market crash wasn't just a financial event. It was a signal, a wake-up call. It's a reminder that in the modern world, wars aren't only fought with weapons. They're fought with tariffs, currencies, and code. And as gold shines brighter and crypto grows stronger, the question we must all ask is this: are we watching the collapse of the old financial order or the birth of a new one? Because the economic war has already begun, and in this new world, the winners won't be the strongest armies, but the smartest economies. Thanks for watching. If you found this breakdown insightful, don't forget to hit that like button and subscribe for more deep dives into the forces shaping our world. See you in the next one.